Welcome back to Counting the Cost. I'm Lauren Taylor. Now, as the United States gets itself into more debt, there are concerns about its main lender. China now owns more than $800 billion worth of US government bonds. In recent months, China has expressed worries about America's mounting debts, the impact that it could have on the dollar and its US holdings. But it appears that both have little choice but to be bedfellows through this economic crisis. Let's cross over now to Washington, where Rosalind Jordan has more.
Thanks so much. Now, of course, the biggest buyer of Chinese goods is the United States. The country ran a $68 billion trade deficit with China in 1999. In 2008, though, that deficit widened to a record $266 billion. But while the U.S. is the biggest buyer of Chinese goods, it ranks just fourth among China's biggest importers. That's behind Japan, South Korea, and Taiwan. Now, Americans spend $27 billion on toys and games from China, $24 billion on clothing, and another $14 billion on Chinese-made shoes. But that's just part of the financial relationship between the two countries. As we hear from Tom Ackerman, the dominant partner in the relationship is beginning to shift.
The U.S. greenback, it's money that Chinese in search of a safe thing once liked to call American gold. But as the U.S. tries to spend its way out of recession, the dollar's luster may be fading in Chinese eyes. Despite Washington's repeated assurances that Beijing's ownership of $800 billion in U.S. Treasury debts is still a sound investment.
I appreciate greatly the Chinese government's continuing confidence in United States treasuries. I think that's a well-grounded confidence.
But when Treasury Secretary Timothy Geithner recently tried out that same line on a visit to Beijing University, he was met by laughter from his audience.
Because the audience knows the U.S. is spending more than it can afford. For the past 7 or 8 years, we've been spending 4, 5, 6% more of GDP than we've been earning in the form of exports. And we had to pay for that by borrowing.
Borrowing from China more than from any other lender. And in just the past year, Washington's indebtedness to China has grown by almost 50%. Yet China shows no signs of curbing that lending, in spite of official expressions of concern that its investment could eventually go sour.
They have to hold on to those dollars, otherwise the dollar's going to fall. It's going to be creating an excess supply of dollars in the world market.
And if the dollar falls too far, that would mean a painful loss for the Chinese as well. But if you want to see how the Chinese earn those dollars, just walk into any large American store stuffed with goods made in China. The huge chain of Walmart stores alone sells about $1 in every $8 of China's exports to the U.S. And because prices here are low, the customers are more than willing to spend no matter where the products come from.
I don't wonder because I know they're all made in China. So.
Does it bother you?
It does bother me, but what can I do about it?
Price is a big consideration for my family. And so often, I need to find the best bargain for us.
It doesn't bother me, but obviously if you give it some thought, it's taken away from jobs here.
I've estimated that overall between 2001 and 2007, we've lost about 2.3 million jobs. I would say over 200,000 of those jobs have been lost due to imports by Walmart alone.
Like it or not, China and America are likely to continue their respective roles of creditor and debtor for years to come, or as the optimists might call that relationship, the world's biggest joint venture. Tom Ackerman, Al Jazeera, Washington.
To talk more about this, we're joined now by Damien Ma. He's an expert on China-U.S. relations, and he's an Asia associate at the Eurasia Group. Damien, thanks so much for coming in. We've heard conflicting stories now about how the Chinese look at that more than $800 billion it owns in U.S. treasuries. How worried is China about its investment?
I think to start off with, this has been an unlikely of marriages between the U.S. and Chinese economy. They don't particularly see eye to eye on a lot of different issues. But I think a lot of people have been overplaying that there's an imminent divorce in the economic relationship between the two countries. And I think before we get to that, there's a lot more steps to do to sort of work things out before you get a sudden divorce. What happens, I think, the Chinese have been saying a lot, as we saw recently. Premier Wen Jiabao has publicly said that they're worried about the safety of U.S. assets. And really, this was a comment directed at the domestic audience.
So, is China going to divest itself of the treasuries? And if it does, what impact does that have, first on the U.S. economy and then on the Chinese economy?
In the short term, my view is that they're not going to divest themselves significantly out of U.S. treasuries. And if you have been watching recent numbers, they've actually gone up. So China has rushed back to U.S. assets, but they do have a legitimate concern over the safety of U.S. assets because they are invested, as you say, $800 billion in the relationship.
And could the divestment also hurt its attempts to come out of its own economic slump?
Absolutely. If they divest too fast or too much, that would cause their own currency to appreciate, and that would further hurt a already decimated export sector.
What about pegging the yuan to the U.S. dollar or breaking that bond? Could that hurt the Chinese economy?
Right. That, again, would most likely involve an appreciation of the currency. Some people believe that the currency is undervalued by 20 to 30%. So if they do so, which we don't see likely in the near term, again, that would hurt a lot of their export sector.
China's been investing in many other countries, trying to get into partnerships with companies in other countries. Should people be worried about that if they're not Chinese?
I think a lot of what China is doing abroad is, of course, as you say, trying to secure energy supplies and commodities. A lot of people make a big deal out of the fact that these are all politically motivated moves. I take a slightly different view. I think a lot of this is actually driven by China's powerful corporate actors, like its national oil companies and other legitimately powerful commodities actors. So the government actually hasn't really come down and tried to coordinate these deals. It's very much a corporate sector-driven move here. Again, these are state-owned enterprises, so there is a political component, but people tend to emphasize that over these companies' own strategies in acquiring assets.
And with more than 1 billion people, certainly they have to look at the bottom line.
Absolutely.
All right, Damien Ma with the Eurasia Group, thanks so much.
Thank you very much.
Now, turning to South America, where unsurprisingly, Venezuela is helping to quench China's thirst for oil and natural gas. But President Hugo Chávez's Bolivarian revolution demands a lot more cooperation from China. And as we hear from Dima Khatib, that partnership stretches all the way from the depths of space to Venezuelan soil.
It was a historic moment for Venezuela when its first satellite ever, the Chinese-made Simón Bolívar satellite, was launched in China in October 2008. It is just one of many aspects of a growing alliance between Caracas and Beijing that stretches from space to the depths of Venezuelan soil. Here in the Faja del Orinoco, the world's biggest oil reserve, China is helping Venezuela explore an area that contains about 40 billion barrels of crude oil, twice the volume of oil reserves in the United States. In recent years, Venezuela started exporting oil for the first time to faraway China and is planning to build refineries there.
China found in Venezuela a reliable partner that guarantees energy supplies for the long term. This is China's main interest here.
This mobile phone, baptized the Vergatario, or in colloquial Spanish, the very best, is the first Venezuelan mobile. It is assembled in a mixed Chinese-Venezuelan socialist company. The Vergatario costs a mere $14 US, the cheapest by far in the market, and is intended to cater to low-income Venezuelans.
When President Chávez came to power 10 years ago, commerce with China was just under $200 million. It jumped to $10 billion last year. That is 50 times more. Chinese officials say that Venezuela has now become the biggest recipient of Chinese investments in all of Latin America.
While the Chinese community has existed here for decades, the presence of Chinese companies is on the rise in all kinds of areas. The relationship serves China's commercial interests, but for Venezuela it serves ideological and strategic purposes. Since becoming president, Hugo Chávez has traveled to China 6 times, the latest trip this year, making him its most frequent visitor among Latin American leaders. Professionals from Venezuela studying Chinese thanks to cultural exchange programs are expected to contribute to Chavez's model in which 20th century Asian socialism crosses roads with 21st century Latin American socialism. Dima Khatib, Al Jazeera, Venezuela.
That's all the business news from Washington. Let's head back to Doha.
And don't forget, you can always keep up to date with these and other stories by checking out our website. The address for that is aljazeera.net/English. Then click on the left-hand side for the business page. And of course, our special is also on there. Click on China Buys the World for plenty more stories and videos. And you can leave your comments. And in reply to our question of the week, what do you think of China's outreach? Should the world be wary of this Asian giant? That's it from me, Lauren Taylor, this week on Counting the Cost. Thanks for watching.